So today's topic is about the partner pay. When a partners can get paid for business expense. So it is a frequently asked question from business owners when you are in the partnership. You know how you're in a partnership with your mother-in-law, right? You just can't tell your mother-in-law that you want to deduct this, you want to deduct that. She won't like it. So you want to make sure that you calculate your expense. If it is for business purposes, you have following ways to deduct it. So that is what we want to talk about today. Before I go on to our slides, I just want to draw your attention to our YouTube channel. And you see that subscribe button right there. Subscribe to our channel would give you everything we're going to talk about. We are going to talk about, you're going to get a notice. And after the webinar, like today, and it will be deposited into the channel. Anybody search the topic, you'll find us. And of course, when we put that recording on the channel, it's not gonna have this beginning drama, you see. So it is still online is better, right? Online is better because you just can see the real person. Yes, we're not AI, we're not robot. We're really real people and with stomach aches sometimes. So that's what I have today. And let's go through our slides. This is the one that I prepared for you. I know my picture kind of blocking it for you, but the title of this today is When Partners Pay Business Expenses. So let's dive into it. And about our firm, this is our first slides. Our first, second, third slides is kind of standard. We want you to know about our company. We're just so special, right? We're special because we have like this collectively 40 professionals and we speak 10 different languages. Oh, not myself, not me speaking 10 different languages, and collectively as a group, we speak different languages. And we serve a lot of clients, and 10,000, 12,000 clients worldwide. We also have 4 branches, and we just set up one, the number 5 one, there in Houston, Texas. And we're working on renovating the building and make it looking like community CPA. Yeah, we are, we're everywhere. We're following our clients. When we got more clients from certain state, that's where we go to. We set up a local office. I myself served on this National Taxpayer Advocacy Panel. This is a IRS. This is federal government established a advisory committee to IRS. So while you're working in there, and you do learn a lot about IRS, I will tell you that after 3 years working there, I felt I gained a new understanding of how vast IRS is, how much work they do, how much more respect and I would give to the agency. Not like when I just touch on the surface, and it's a different understanding of the system. So in our office, we actually have this roadmap about what IRS do. It is quite a maze, but it is a roadmap of the workflow IRS has. It's amazing. So with that said, any problems and issues you have with IRS, there's a way to resolve it. And I have 2 books I wrote, and 8 a.m. and 10 a.m. I am writing the 2 p.m. right now. So my book, there are 4. So 8 a.m. starting your business, 10 growing your business, 2 p.m. expanding your business, 6 p.m. retiring from your business if you ever want to retire. And no responsibility disclaimers, you know what I'm talking about. Now let's see. When partner pay expenses to the business, and so what do they do with these expenses that they paid for? It is very normal for a partner to have expenses that are related to the business. Am I right? So especially it likely to occur in the function where you want to get new clients and you are going out participating in an event. Those kind of things, the partner do go. And then in the process, what do they spend? They spend meals. They probably call the Ubers. They have, cost, the ticket, the flight, and education, the publication, all of these things are the partner probably just spend out of their pocket and without really bringing that into the business. So those are the expenses we're talking about. So we're saying that number one, you're the owner of the company, you're one of the partners. Number two, and you spend money for business benefit. Number three, you spend it out of your own credit card, out of your own account. It was not the partnership or the company's account. So you spend on your own, sometimes your other partner don't even know it, right? Can you get reimbursement or not? As long as the expenses are the type of partner is expected to pay, and without reimbursement under the agreement of the firm, right? So let's say in a law firm, you got lawyers and 5 lawyers, they're partners with this law firm. And each one of these lawyers are in the different areas to practice, so they have expenses they spend. But in this firm agreement, it didn't say that, okay, you can reimburse this, you can reimburse that, you can reimburse this. Most likely in the partnership like that, such agreement is not there. You're paying on your own. Unless, say, the firm, the company buys cell phones for all the lawyers, then of course you don't have to get reimbursement because it's already paid by the partnership, right? And the partners also has to know that has to be a functional expense. It cannot be something you bought for your own pleasure, has nothing to do with your business. That is not reimbursable. The reimbursable ones are the ones you must incur to get that job done. The unreimbursed necessity business expense is normally can be deducted. Let me tell you how that works. So first of all, you say that, okay, I have expenses and the firm, the partnership do not pay me. But it is legitimate business expense. So that's number one, you qualify. Number two, you can bring this expense to the partnership to get a reimbursement. Of course you can, right? If other partners not gonna raise up their arm, goes, oh yeah, you got too much money, then you can always get reimbursed by the partnership. But if not, you can save it till the end of the year to report that on your 1040. So this is where I often see that the active partners in the partnership are not doing that. So they basically say, well, the partnership didn't pay me, so forget about it. Don't forget about it, and you can use Schedule E to claim that. And when you claim that, you also reduce not just income taxes, you also reduce your self-employment tax, right? So just remember that you do have a way to get reimbursed, and whether it's from the partnership or from your personal 1040. And what if? So right here, what if they could have been reimbursed? Yeah. So if the reimbursement it is really legit, you can be reimbursed. The partnership is not doing it, then you of course doing that on your 1040, so you reduce your taxable income. And you are not allowed to deduct if it is voluntarily, you just like to spend it. It's not necessary, it's not reasonable for your business. The best way to eliminate any doubt about whether this reimbursement is right or wrong, whether it's for the partnership interest or not, is to have a agreement, written policy inside of your partnership, right? So that way there's no argument related to what you can reimburse was not. I will tell you that the hardest, in practice for so long, I have seen partnership really flourish. They're really doing well together. I have also seen the partnership broken up. Even they're married couple and they would break up because of this business partnership. So having everything written black and white, try to imagine all the complex scenarios and put that on paper and use that to guide your footprint. That's probably the best way to run business, ladies and gentlemen. You want to, a lot of times small business owners like myself, it is so easy for us to have a good handshake, a big bear hug, and then we're done. We're in business, right? That is so cool and so nice and so heartwarming. I will tell you that it doesn't last. You need to have a regulation put in place. So make sure that you think through that with very cool head instead of just very emotional. And partners works at the home, right? So whether you can deduct your home office or not, it goes by the rules of when you are in your own business, do you deduct your home office? So you know how that works. And normally, you deduct the home office in the Schedule C if you are running sole proprietorship. But because it is a partnership, so you will get the K1. Then you want to deduct your home office expenses under the Schedule E, where there is a supplemental income and expenses sheet, and you fill up in there of your home office expense. Of course, and if your partnership, if your partnership office is so close to your home, you always just work in the office and you hardly work at home, then deducting home office, not using your home office as a regular place to conduct a business, and it probably is not justifiable for you to deduct home office. Just, I actually, the place I stay and versus the office branches that we have is always very close. I try to make it so close that I could even walk over. So with that said, I never really work at home per se, right? There's no need. So when I work and I just come to the office. So some people in the partnership are that way. Some always just want to work from home, conducting majority of the business at home, if that's the case. And of course you deduct home office, right? And there is a home office deduction that is made available to the partner. Principal place of business. So that's a definition of how you deduct. So the principal place of business test can be passed in two ways. Means, they want you to decide whether your home office is your normal principal place of conducting your business. So to do that, the partner conduct most of the partner income earning activities at home office. That's number one. Number two, partner pass principal place of business test if he or she, number one, use home to conduct administrative work and it doesn't make substantial use of any other fixed locations. So it means the office, right? Not using the office much and use most of the home and at home doing the admin work. So those are definitions for you to qualify to deduct home out of your income. Other ways of paying partners. Of course, there's other ways. You can pay the partner by salary. You can pay the partner by draws. So normally, if I am in the session with a client and people say, how many ways do I have to pay myself? Then I will say 4 ways. Salary, you pay yourself by W-2. Draws, capital draws, you just draw. And then reimbursement is number 3, right? We were just talking about all the reimbursement. But what is the number 4? Loan. You can loan money from your company to use, but as soon as you say loan, there should be a loan terms, right? You got to pay it back. You got to have interest charges. If you say, well, it's my own money, I don't want to pay interest, it's just not the best practice. Here, we're trying to prevent you to fall into any traps so you get into trouble. So I would just say that if you loan and have a term, then you can borrow and you can pay back slowly. You can even make a 50-year term loan. Who cares? As long as you have it, and so you slowly paying it back, right? With that said, let's summarize. So when a partner can be reimbursed for business expense under partnership agreement or standard operating procedures, the partner should turn them in. Otherwise, the partner cannot deduct the expenses. So if you want to reimburse that from your business, then you need to turn that in and get deducted. Then on the partnership side of the deal, the business should set forth a written policy for it. So the business, your firm should be saying, your law firm should say that what can be deducted and what cannot be. This applies equally to all the members of your partnership. So this is kind of where you are. But let's say if the firm don't have that policy, then it's your personal business, right? You take that over and you bring it to your 1040. Then you don't deal with your firm anymore. You just deal it on your 1040. But of course, in the partnership, some people are active partners, some are not. So if you are investor, passive partner, you don't qualify for those deductions. I just want to make that really clear with you. All right. With that said, let's see. These are the people in my firm, and they are partners. We are the partners. And those partners, they actually knows different area of our business. If you have any questions, you want to become one of our clients and contacting one of us. This is my second last slide to just introduce you the faces of the partners in the firm. Then, of course, my last slides talk about where you email us and also the phone number. The firm has 515-288-3188. And remember, we open 6 days a week, Monday to Saturday, and we start at 8:30, ends at 5:30. Ladies and gentlemen, if you say that you're too busy, you have Saturday to be in contact with us. So hopefully you will subscribe to our channel and learn more. And we are here to share our knowledge day in, day out. That's part of